Hi friends, if you see this snippet, you are going to see that by the end of 2032, India is going to add 517 gigawattage of power capacity. This is huge. This is really huge. And also more importantly, if you see this data, you will see that renewable energy capacity is going to be around 375 gigawattage. Meaning renewable energy sector is likely to see a lot of capex investment in the next 8 years. And this is why precisely I am rigorously analyzing this sector. For example, very recently I spoke about one of the stocks called Sangvi Movers Limited on my YouTube member community, giving a lot of details about that particular stock because that stock is providing crane rental services for windmills. And if you're looking for such analysis, then you can consider becoming a YouTube member as well. Go to my channel, click on the membership tab and join my YouTube member community as well. But coming back to this video here, I am going to speak about 3 stocks. One from hydro sector, second from wind sector, and third from solar sector. Just a big disclaimer that just because I'm speaking about these 3 stocks doesn't really mean that you need to go and buy or sell these stocks. This video is going to give you a lot of data backed analysis so that you can make some informed decisions. With that, let's go to stock number 1, which is from the hydro sector, a company called SJVN. Have a look at my screen and you will see that SJVN started to give massive rally from almost, let's say from here, June 2023. At that time, the stock was trading at around 40 rupees level. It has now come to almost 130 rupees level. Almost 3 times rally it has given in the last 1 year. Now, if I show you the reason of why this rally has happened, also I'll give you the technical analysis, valuation, and more importantly, one critical risk about this stock. Allow me 4 to 5 minutes of time and you will learn a lot about this particular company. So first of all, let's go to the profit and loss account and you will very quickly see, if you look at the sales of this company, you will see it's very flat for a number of years. It has been around 2,500 to 2,900 crores of value, and this explains to us that why the stock has been dormant for a number of years, but all of a sudden in fiscal year 2024 the stock gave massive rally. And there are 2 critical reasons of why this is happening. Reason number 1, have a look at my chart and you will see that the company is now projecting that by the 2040 company will add almost 50 gigawatts of capacity, right? If you look at the FY30, company is projecting that by FY30 it will add around 25 gigawatts of additional capacity. So every year they have almost given a vision of adding 2 to 3 gigawatts of capacity in the next 10 to 12 years. This is massive. This is the vision at which the company is operating, and that is why investors have started to buy this stock in the last 1 year. Of course, I'll give you the second reason as well. But now coming back to the ground reality of this, how will this be achieved if you look at it? So have a look at this screen and you will see that company is saying that there is a big capex plan here, that company is going to pour a lot of capex. And if you see the number by 2030, the capex might go to 17,000 crores. Much of this will be funded using the debt. So if you see the debt of this company swelling, then don't worry about it, because sometimes debt is good because you need debt to be able to execute your projects, right? So this is one reason that I can see that the vision is there. There is going to be additional capacity coming up, because of which the investors are starting to give attention to this particular stock. Also have a look at this snippet and you will see it is June 2023, almost 1 year old, but the point I'm trying to drive home here is very important. You see the blue portion of this pie, you will see that is the hydro, right? So as of now, the company is predominantly generating electricity using the hydro sources. But if you look at their total project portfolio, when it becomes like 50 gigawatts that we have spoken about, then you are going to see that the split here, hydro is going to be 56%, solar is going to be around 40%, and thermal is going to be around 4% here, and wind will be minor. The critical point is that company is going to add solar capacity in the coming years. So it is going to be good hydro plus solar combination in the coming years. The second key reason of this massive rally that we have seen is, have a look at my screen, you will see that last year the company was designated as Renewable Energy Implementation Agency by the Government of India, meaning they are going to raise some tenders to manage the demand and supply of the power. Now company projects that by 2030 it is going to bring additional 4,000 crores of pure profit. So in next 6 years, 4,000 crores of profit, that is likely to be a 600 crores of run rate. If I divide 4,000 by 6, it's going to be around 600 upwards sort of a run rate. And if I just look at the profits right now, it is only 911 crores right now in FY 2024. The point I'm trying to drive home is that even if I remove everything else, the profits they are going to get from this agency designation, this itself is going to be around 600 crores of run rate. Now whether they achieve it or not is a second thing, but this is out in the news. This is where the investors are trying to buy this particular stock. Rahul, you're talking about 2030, 2040. Who is going to wait until then? Tell us what is the company is going to achieve in the next 2 to 3 years, right? So have a look at my screen and you will see currently the company is running 11 projects in generating 2.3 gigawatts of electricity, which is already operational. But in terms of the under construction projects, if you see the breakup here, you will see that they are having 4.9 gigawatts of under construction projects going on. There are 12 solar projects under construction that will generate around 2 gigawatts. 1.5 from hydro and 1.3 from thermal. So overall, if you look at it, they are having 7.2 gigawatts of pipeline plus the operational capacity right now. Even if you look at the 2 to 3 years of visibility, I see good visibility here from a 2 to 3 years perspective. Let's now quickly do a technical analysis of this stock. Have a look at my screen and you will see from almost around March 2024, in the last 3 months, the stock has been range bound between 120 to 140. And if I look at the last few support levels, you will very quickly notice that the stock has a strong support at 123 level. Here on 4th of June, it took that support. Back in May, it took a support at 123. Here as well at around 124, it took a support. So there is a strong support at 124 level, 123 level. The second level of support I see is back in March. Here the stock went down by almost 101 rupees. These are the important support levels, but can it go back to second support level? I doubt, because if I show you another data point here, look at the 4th June of election crash day, and you will see that intraday the maximum fall the stock went down by was up to 114 rupees level. So in my view, 101 rupees act as a very strong support level, but it is unlikely to go to that level because of what we have seen on the election day crash. Let's now move to the valuation of this company. If you look at the PE ratio of the company, it is at 61 versus industry PE of 37. So it is almost trading at the double PE. And if you look at the PB ratio, it is again higher than the industry level. And one of the potential reasons for this to trade at a higher PE and PB is because of the visibility in the revenues and profitability that I've just explained to you. Now, the last point I want to cover about SJVN is a risk, a big risk. Have a look at my screen and you will see that the promoters holds close to 81% of the stake, which is the government of India and the Himachal Pradesh government. And if the government decides to dilute their stake by offer for sale, then the stock prices may go down. This is because last year in September 2023, when the government did the offer for sale, at that time government decided the price at 69 rupees per share, and at that time it was given at a discount of 16% at the market value. So of course then stock fell down by 16% and got automatically corrected. So that risk always remain with this stock. For example, let's say tomorrow, hypothetically, I go and buy this stock at 132 rupees level right now, and let's say day after tomorrow government comes back and says that, hey, we are doing an offer for sale for SJVN and the price that we are setting is 110 rupees. Within a matter of hours, the stock price will come down from 132 rupees to 110 rupees. So this risk is always there with this stock, and I wanted you to be fully aware of this risk if you want to ever invest in SJVN. So far, if you're liking this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with the content for you at zero cost. Also, you can consider subscribing to my YouTube member community if you want to get in-depth analysis of stocks, mutual funds and various other assets from an educational perspective. So after covering SJVN from hydro plus solar sector, now let's move to the wind sector, and I'm going to pick up Inox Wind Limited. This is a stock that I want to cover for multiple reasons, and one of them is I want to teach you the concept of arbitrage. Listen to this 3 to 4 minutes of commentary and you're going to learn something that nobody is speaking about on YouTube channels. The very first question is, there are two companies actually. One is Inox Wind Limited, as you see on my screen, trading at around 144 rupees level. And the second company you will see is Inox Wind Energy Limited, which is trading at around 7,200 levels. What is the difference between these two companies? Are they two separate companies? What's going on here is what I need to explain. So if you see my screen, Inox GFL is a group and it operates into two main segments. One is the chemicals and second is the renewable. Let's forget about chemicals for now, topic for some other day. But if I come to the renewable sector, they have three listed companies right now: Inox Wind Limited, Inox Green Energy Services Limited and Inox Wind Energy Limited. Now, why did they have Inox Wind Limited and Inox Wind Energy Limited? It is a lot of background. Let's not go there. The point is that they are now merging these two companies, Inox Wind Limited and Inox Wind Energy Limited. Inox Green Energy Services Limited is mainly the O&M, which is the operations and maintenance services that it provides. Very much similar to what Suzlon does, but Suzlon does it under one umbrella, right? But here, for some reason, they floated another listed company. Now, coming back to the merger of Inox Wind Limited and Inox Wind Energy Limited. It was announced back in June 2023. Almost a year back it was announced, and at that time what was announced was that 158 equity shares of Inox Wind Limited will be issued for every 10 equity shares held in the Inox Wind Energy Limited. So the swap ratio was 158 to 10, right? Hope this is very clear so far. But what the company did in April 2025 is that before this merger could happen, even the merger is not happened even now, still there is approval process going on. The record date is not announced at the time of recording this video on 2nd of July. And in between, what the company did is April 2025, company announced a bonus issue for Inox Wind Limited. And they said that anybody holding one share of Inox Wind Limited is going to get 3 shares absolutely free, called bonus shares. Now, due to which they had to then readjust the swap ratio, which is 158 to 10, then became 632 to 10, because 158 into 4, right? Because now they are going to give that 1 share plus 3 additional shares as well. So all in all, the new swap ratio stands at 632 to 10. Now comes the key point here about arbitrage. Have a look at my screen and you will see that right now if you go and buy Inox Wind Energy Limited, hypothetically, I'm not giving you stock recommendation here, but let's say you go and buy 10 quantity of Inox Wind Energy Limited at today's price, which is 7,275 rupees, you're going to invest how much? 72,000 rupees roughly, right? Now, let us say after merger, Inox Wind Limited, you are going to get how many shares? 632 because of the adjusted swap ratio. That means that at the current price of 144, if I do the comparison of the current price for both Inox Wind Energy today and tomorrow, let's say the record date comes out to be tomorrow for a sake of discussion here, then in that case, this 632 multiplied by 144, this investment of 72,000 becomes 91,000 rupees roughly. That is a gain of 18,000 rupees, and this is 25% on the 72,000 that you invested, right? So this 18,000 gain or 25% gain is what is called one type of arbitrage in the world of investing. So whenever a company is going through merger or demerger, you really need to look out for arbitrage, because it does present you an opportunity whether you should go and buy Inox Wind Limited here or Inox Wind Energy Limited here. Now this 18,000 gap that you see right now, it may not be valid tomorrow because the prices will vary. For example, tomorrow 144 might come down by 5%, but this 7,200 might come down only by 3%. Generally, the movement happens in the same direction, but by how much amount it may vary, right? And people who have been following Inox Wind merger will remember that back in June 2023, when this swap ratio of 158 to 10 was announced, at that time, this arbitrage used to come at around 40%. So what I've seen over the years is that this arbitrage starts to shrink as we go close to the record date, right? So never buy these arbitrage opportunities when the merger is announced. Go and look at this arbitrage ratio at the time of almost record date, which we are going to hit very, very soon in my view. Now, just because there is an arbitrage opportunity, it doesn't mean we go and buy the stock. That will be the foolish decision in my view. We still have to do full analysis of a stock. So allow me 2 to 3 minutes of time and I'll give you good commentary about this particular stock. Have a look at my screen and you will see that in the last 5 years, if you see the stock prices here, again, not much movement up until almost December 2023, and from that time onwards the stock has been rallying like crazy. Because if I show the last 1 year return, you will see that last 1 year the stock has given 254% returns. Now if you look at the P&L account, what you will very quickly notice is that up until 2017 the company was making net profit, but after that it started to make losses, and still in FY 2024 it has made losses, albeit there is a recovery here. Top line in 2024 almost went 2.5 times, while the loss has narrowed down massively from 689 crores, it has now come down to only 49 crores of losses. And this, along with their order book that I'm going to show you in a minute, tells me that why the stock has been rallying in the last 1 year. Have a look at my screen and you will see that their unexecuted order book stands at 2.7 gigawatts. And I put this in context, how much of power actually they generated last year. And if I show you the data, it is only 0.3 gigawatts, which is 376 megawatts. So almost 8 to 9 times of the order book is what this has right now. And if you see this data here, that FY24, the net addition in the order book was around 2 gigawatts, 2.2 gigawatts, which is very, very high, almost 3 times or more than 3 times of what they had in terms of the opening order book as of FY 2023. Secondly, let's also have a look at the balance sheet, and you will say they have huge debt, and that has been a massive problem for Inox Wind Limited. People who have been tracking this company will know this, that debt has been a very, very big problem for this company. It's standing at 3,248 crore. But if you dig deeper, what you will notice is that this is not the net debt, right? And again, what the company has done is they have given a breakup of that. I don't know whether you can see this might be reading very, very small, but if you see, the gross debt was around 3,200 crores, but the net debt, you will see out of this 2,900 crores, the promoter debt is very high. But if you remove the promoter debt, and if you also factor in the supplier's credit, the net debt that comes on which they are paying the interest, because that's where the P&L comes into picture, that is only 655 crores. And what management is saying is, by the first 6 months of FY25, they want to be net debt free. So what I can summarize so far is that their order book is looking good, and also the company is at a point where they're pivoting from a loss making company to a profit making company, hopefully in the next 1 or 2 years. Rahul, is there any particular risk with this company? There is one massive red flag that I want all of you to know. Right? Have a look at my screen and you will see that the promoter stake in this company has been going down continuously. I don't understand why this is happening here, because if you see, Inox Wind Energy Limited used to have 50% control. It is now at 38%. If you also look at other promoters, they have gone down from 8% to 4.19%, right? So almost every promoter has diluted their stakes, which I don't understand, which I don't like. But more importantly, there is another red flag that I want you to be aware, which is, while this merger of Inox Wind Limited and Inox Wind Energy Limited was on the cards, on 25th of April, company announced the bonus issue for Inox Wind Limited, giving 3:1. Now, this timing of this needs to be really questioned, because these bonus stocks were issued by 25th of May, right? So that was the record date that was given, May 24th, and these bonus shares were credited by 25th of May. Now, after that, what happened? There was a lower circuit in the company, but more importantly, what the owners did, what the promoters did, which is Inox Wind Energy Limited, 28th of May, after 3 days, they sold a massive quantity of the stocks. Almost 50 lakhs of shares is what they sold, which I am totally not able to digest. Understand that you issue the bonus shares first. You yourself is a promoter. You take those bonus stocks in your account and then you sell it off in the market, letting the stock crash. I just don't understand this timing. Therefore, I wanted you to be fully aware of this particular drama that has happened. In my view, I call it drama, right? So I've given you a lot of analysis of Inox Wind Limited. I've spoken about the arbitrage concept. I've given you the order book, and I've given you this red flag. It is up to you whether you want to sell, buy and hold this stock. I am no one to tell you what you should do. I have given you data backed analysis, and if you like that, I request you to hit the like button. Let me know in the comments a simple thank you. This is why I put a lot of hard work in creating these videos. It takes minimum 10 to 12 hours of my time to create these videos alone. I hope you understand that. With that, let's move to stock number 3. Third stock that I want to quickly cover is Sterling and Wilson Renewable Energy Limited. The stock in the last 1 year has given 145% of returns in just last 1 year. However, in the last 1 month, the stock has been correcting. At the time of recording this video, the price is at 706 rupees level. And in my view, this may further continue to correct. And I'll tell you the reasons for that as well. Just allow me 2 minutes of commentary. See, first of all, what does this company do? The company is a solar company, and they are a solar EPC company having a portfolio of around 18 gigawattage. So reasonably big player in the international market. And if you look at the journey of this company, one point I want you to quickly understand is that in 2022, Reliance acquired 40% stake in this particular company. I'll tell you why that happened as well. But before that, Reliance had acquired the stake in this company at 375 rupees per share. Forget about why did Reliance acquire the stake. Their money is almost doubled already, right? Now coming back, why did they acquire? Because in 2022, the company was in deep shit. There was a financial issue going on in the company and they needed an external investor. Because of that, they got Reliance. But as of now, Reliance have reduced the stake from 40% to almost 32% as of March 2024. Now let me quickly dig deeper and show you the P&L and balance sheet of this company. Have a look at my screen and you will see up until March 2020, company was doing good. They were making some profits. But from fiscal year 2021 onwards, then company started to make loss. In fact, FY 2022 and FY 2023 has been the worst loss-making years for this particular company. Now there is a recovery in 2024. The losses have come down to 172 crores of loss. So FY 24 seems to be the recovery year for this company. And if I show you some of the data points, that the company's net debt has come down from 1966 crores to 116 crores. So that's a massive improvement when it comes to debt. The company's unexecuted order value is now at 8,000 crore versus where it was in FY 2023 around 5,000 crores. So that's a massive improvement as well. Their revenues are now up by 51% in FY 2024. So I would call FY 24 is the year for recovery for this particular stock. And one of the important point that you will notice here in the difference between international EPC and domestic EPC, you see how this is pivoting. Almost in FY 2023, their international EPC business was 1,400 crores out of 2,100 crores. It has now come down to 400 crores. And the domestic one, where the Indian demand is coming, it has gone from 500 crores to 2,400 crores. So seems like a pivot happening here from international versus domestic contribution into the revenues. If I just speak about the order book, FY24, as I said, their order inflows has gone up by 37. And if I talk about the total order book, it is standing at 8,000 crores as of FY 2024. Now comes, if all looking positive, then the why stock is correcting. Have a look at my screen and you will see June 11th, 2024, the stock was hitting all-time high of 795 rupees level. It has started to fall from that level. What happened exactly on 11th of June? Have a look at my screen and you will see on June 10th, this news came out in the market that the company's promoters, Kainaz Khurshad Daruwala, has pledged around 4.12% of the stakes. And when a promoters pledge their stocks, in my view, that is not a good news. And that is a massive red flag. Potentially, that's what the market is reading. And also in the past, the company has had a bad history of financials. And if a company's promoter is going and putting their stocks on pledge, then it does give a massive red flag. In my view, that may be the reason that from 11th June onwards, if you see, the stock started to correct massively. It is now at 706 rupees level. In my view, there may be further correction. So please be careful about this stock. And if I talk about as of March 2024, the total pledge that the promoters had done was around 37%. The massively pledged company is what I would call it. And the reason I am covering this stock is I want you to be aware of this, because sometimes what people say is that, oh, this particular stock is given 145% returns and this is in the sector which is having tailwinds. Let me go and invest. No, my objective here is to give you data. My objective is to give you red flags. My objective is also to give you green flags and for you to make your own decisions. Lastly, I will quickly say that if you look at the shareholding pattern here, Reliance had cut down stakes to 32% and some of their other promoters, for example, Shapurji, Palonji and Company Private Limited, from 50%, it has come down to 12% in a matter of 3 years. If you look at Kainaz Daruwala, Khurshil Yazi Daruwala, all of them have reduced their stake from 8% to 5%, 9.77% to 1.48%. All in all, the positives of this stock is that the order book is looking very, very healthy. However, the promoters are diluting the stock. That is a red flag. Again, up to you whether you want to sell this stock, buy this stock, hold this stock. Up to you really. I have presented data to you totally unbiased. I know this has been slightly longer video, but I have given you 3 stocks and I have given you my data backed analysis, not any stock recommendations. And if you like that, hit the like button. Let me know in the comments. A simple thank you. I'll see you in my next video. Until then, keep rocking.